Thank you for joining Startup Portal's Equity Crowdfunding Summer Series Recap. My name is Rick Leimbach. I'm an outsourced CFO for crowdfunding companies. We're taking you through the last 7 weeks of looking at various crowdfunding portals and companies within them. I'm going to go through and refresh each of the portals and the companies, and hopefully you'll get a few insights along the way and go back and look at the previous videos. And hopefully it'll help you in any decision you have in trying to raise capital through equity crowdfunding. There are 50 portals that individuals can go out there and raise capital through. Regulation crowdfunding was started to allow individuals to invest in early growth companies, and they do this through the funding portals. You can raise up to a maximum of $1,070,000 over a 12-month period, and there's some SEC filing requirements to it. And you're not a public company, but you do have some disclosures over a period of time. Now, we looked at 7 of the crowdfunding portals, and really the question here is, do each one of these fit your business model? Are you trying to raise capital for your business? I'm going to help you ask some questions to yourself. And which portal would fit me? So each of the portals you'll see have their own business model. So you want to say, hey, where do I fit? Who do I fit with? And how do I benefit by raising capital, as well as the investors benefit by having a return on the capital? So ideally, that's where we want to go with equity crowdfunding. Fundopolis was one of our first portals that we looked at. And Fundopolis is a little different, that they have equity where you can own part of the company, but they also had, as we saw with Goodwood, a revenue share agreement. So you're able to raise funds and you're going to pay that back with the revenue from the company over a period of time. And as an investor, I like this model just for the fact that I'm putting my money in today, but ideally, the money I'm putting in today will start coming back to me in a very short order as revenue is being generated, and the return on that investment will come, after my capital is paid back. So I like a revenue share model for crowdfunding, in that it if you identify your need and you can solve your problem by sharing revenue and raise capital that way, I think the company is better off because they're not giving up equity in the company. So I like the alternatives in equity crowdfunding, such as revenue share. Now, a couple of the questions you want to ask yourself as you're going through the equity crowdfunding analysis. Does it fit you? Do you have a business model that scales? Can investors see your story of the future, how you're going to grow? Can you return capital to investors? Can they get the liquidity out of it? When you're researching portals, just make sure your business model fits theirs. Portals are still evolving, so do your diligence, ask the questions, make sure you're comfortable with it. And certainly larger platforms today have advantages. And there are 50 portals out there, but the larger ones have advantages. They should be on your top 5 list, but don't discount other portals because you're trying to fit your model. Now, Republic was founded by some alumni of AngelList, which is an online investment platform. So they know the industry. If I'm not mistaken, they helped design the crowdfunding industry and the requirements. And they typically use rev share crowd-safe agreements. And Gesture was a company that used a crowd-safe agreement to raise their capital. What I like about safe agreements is that people are investing in your company, and you're not necessarily setting the price today, but you're able to get an opportunity to invest in the company. And as the company needs larger funds, you'll lock in your ownership percentage at the rate with the larger investment. That's the way I look at it. But I like that in that you're getting at the ground floor, and you're not setting the mark. So there's no potential to get diluted immediately by the next fundraising round. So that's a positive aspect of the safe agreements that I do like, and Republic seems to do a lot of those. So that's one to look at, as they're not one of the biggest, could be an alternative that fits well into your top 5. Honeycomb Credit, on the other hand, allows for small businesses to borrow from investors and pay back over time, similar to debt financing. Their interest rates are around 5 to 14%, and there are some fees that you have to pay up front. But all in all, it's an alternative to getting a bank financing. So what I like about Honeycomb is that they have a sweet spot, $25,000 to $50,000, where it's funding from loans for your needs. As we saw in our examples, you had leavened bread. raise capital to start their restaurant, whereas Skidmark Garage was raising capital to help them through the COVID issues. So I like the platform. One of the positive attributes of the Honeycomb platform is that they act as a collateral agent. So if your investors have issues with you, they don't come to you as debt holders individually. They go through the collateral agent. So I like that you're not getting overwhelmed by having 100 different loans on your books, let's say. It's 100 different individuals or lending you money, but it's not individually reaching out to them, which I like that. WeFunder, on the other hand, ideally is the Kickstarter for investing. You can start with $100 and invest in different companies. And the football club was our example in which they were buying a soccer team in Europe and raising the funds to do that. Ideally, they want to be in the US, but they're starting out with their model in Europe, but the fans essentially have an ownership of the team. Is crowdfunding right for your business? Is an investment necessary for the growth of your company? One of the things you want to identify is your funding needs. Ask questions of the funding portal and do due diligence on the company and yourself. One of the things you really have to understand is that you will go through a diligence process. You'll put together financials. You'll answer questions about your past, your credit history, or something of that nature. So you just want to be upfront and forward. And some of the portals themselves, they recognize that people are asking for funding for needs. So the clarity and the sharing information due diligence will help you get to the end game, let's say, where you're able to raise capital. So just be upfront and clear as you go through that process. Net Capital sees themselves as helping the wealth gap, really allowing individuals to get that access to early stage investments. And they put together equity agreements and membership units. Ecotext was one of the companies that we looked at that was trying to raise funding for online textbooks. So in this age of COVID, very appropriate, and ideally from a crowdfunding standpoint is a great example of how technology, opportunity, and the crowd are coming together to really solve problems of today. I loved Net Capital's secondary platform. They're a front runner in putting this together to allow companies and individual investors to have that secondary market. A year from now, if you're looking at your investments and decide, I've done well with this investment, I'm going to liquidate, I'm going to sell it to someone else, the platform to sell in that secondary market is there, which is really important and really getting crowdfunding to that next stage to sort of act as a stock market platform. So in your decision-making process, can your business be a good fit for a capital raise? What's your comfort with OPM, other people's money? Can you sleep at night? Does the additional capital lift you up to the next step in your business or your business plan? And one of the most important things I think for equity crowdfunding, the friends and family validation is critical. When you're going through this process, I would advise at least write down 100 names of friends and family you can reach out to and say, hey, I'm looking at doing this equity crowdfunding. I'd love your support. And if you can't support me or it's not something that you would do individually, maybe you can tell a friend. I would start building that network to get that influx, get that early pump to get the capital in. So it's important from a marketing standpoint. So just the friends and family validation will help you as you're looking to go down this path. And quite frankly, it saves you from asking a buddy for $1,000. Let them decide if they want to invest $100. So a great model for friends and family. Now, Seed Invest is one of the larger funds. And what I liked about Seed Invest was not only do they have a large investor base, but they're working with venture capital companies, angel investors that have put funds in other companies and may write a larger check depending on their business model. So they're really building that ecosystem of investors that take you through that process where you can actually raise some significant capital. One of the positive attributes about Seed Invest is they had a strong due diligence process. Very important, as I mentioned before, is that diligence is going to happen. So let's get it on the table. They're going to go and ask you questions, financials. They're going to ask you about potentially other deals you've done in the past, etc. So let's just be clear and straightforward and tell the story. Code Combat was a great story in that they have software that they're designing to teach kids to program. So that was their business model, and they've done well with it. So like the platform, should be on your top 5 list, no doubt. I keep asking questions of you to ask yourself. But what type of business do you have? Does your business solve a problem? Do you have a personality for shareholders? Asking these questions will help you as you go down this path. If you're looking to pay yourself through equity crowdfunding, don't do it. Only for the fact that when you take capital, it should be a purpose of growing the business. If you're looking capital to essentially self-fund for the next 12 months, what's going to happen is you're going to take that capital, it's going to leave the business. Yes, it may pay your personal bills, but it's not used to grow the business capital or the business equity and really generate additional revenue. So really think about that. It's not a platform to really take other people's money and give it to yourself. Now, Start Engine was also one that I would have on the top five and one of the bigger ones in the industry. And they have a very strong investor base, but also they have validation for themselves as well as the industry. They've gotten Kevin O'Leary to be an investor, to be a spokesperson. And quite frankly, he's got a Beanstocks app, which he owns 50%, and it's currently raising capital under equity crowdfunding. So Start Engine is a significant player in the industry, and the validation clearly will help everyone. So I like the Start Engine. I like how they do their process. A good example of ways the industry can function is Furry Fortune. Furry Fortune is essentially a partnership where you invest in a movie, and the net profits of the movie will be kicked out to the partners. Now, one attribute I really like is that they put in there to say, hey, anybody that's investing, you'll get paid back before we do, your principal, and then we'll split the profits. Really like that, and I hope they do well with their overall capital raise. Now let's look at the fees. It just gives you a range of where the fees are all pretty much comparable. There are a few that have equity on top, but you'll see the placement fees are 6 to 12%, and then some of the funds have equity fees. And there's some other attributes every fund has, whether it's an upfront fee or accounting fees are reimbursed for you. So everybody's the same, but a little bit different. That's your job when you're looking at equity crowdfunding to figure out what platform fits you. So here you can see the different range and go explore each of the funds and just keep in mind that the fees that you're paying are partly for marketing. So each of these funds have their internal base that they're going to be selling to. So the fees at times may seem a little bit higher, may seem high. However, just factor in the aspect that if they don't market for you, you're going to have to market yourself. So you may have to run ads on Facebook. You might have to, run ads on Google, etc. So just keep that in mind and really evaluate the fees. Ask those type of questions in your diligence to say what comes with the fees. That's very important. Let's recap the companies and how they've done over time. We've looked at each one of these companies over the last 7 weeks. The Goodwood Brewing Company has been slow to start. Again, that's where I would encourage that friends and family network to help get this started. Gesture for the Republic had just kicked off, and they've got 38 days left to go. Leavened from Honeycomb, they were able to raise $43,000. Their target was just 10, so they did pretty well. Skidmark, they hit their target. If Hand-Owned Club has raised $250,000, I think they needed like $350 to get where they needed to go to buy the team. Ecotext has raised $70-some thousand. They're probably, from a first round, they're probably a little slow, and hopefully they go out and come back a little bit later. Code Combat has done extremely well. Their story there is a growth story, a platform story. So coding for kids, especially in this environment where kids are home, is certainly a winner. Vegas Winners has raised $250,000 over time. They've been around for a while. They need to build a platform without a doubt. Furry Fortune has raised, looks like they're complete, about $150,000. I think they needed $500,000, and then we're going to source the funds elsewhere. So I think I mentioned before, I like the Furry Fortune. Now, we've looked at the crowdfunding portals, a sampling of them. There are 50 portals. Find your fit. Know your funding needs. When I say know your funding needs, if you're looking to raise $100,000, you have to step back and say, okay, what makes up the $100,000? Level 1 is my priority. If I really only need 30 to 40, that's fine. That's where I want to target. That's where I want to hit. You get the 40 to 60 could be that second layer that says, hey, if we had that, this would be great. And then 60 to 100 could be that gravy. and that we could really hire people, have the working capital, etc. So you really want to know your funding needs as you're going through this process, because you don't want to go out and try to raise capital and fall short and not hit that priority one level. So just think about that as you're going through your business plan. The other aspect that I asked you to think about is your second financing. If you're going to need additional financing in the future, think about it today. If you're going to raise $100,000 to help you get to that next step, but you're going to need $5 million down the road, just think about how you set up the structure of it. That's certainly something that you can reach out to me. I'd be glad to talk to you on how you're doing your structure, giving you any feedback, and getting an understanding of, hey, where are you going next? It's very important for you to make sure that your funding fits your need. So think about that second financing as you're going through the first. And then, most important, investors want to be on your team. So take care of them, communicate. Allow investors to know that your goal is to have a return on their investment, get their money back, and really and make your business stronger so everyone comes out a winner. And communicate. Just the shareholders letter. Emails are important. If you have big news, share it with them. They want to be on your team, and actually they may be sitting around the kitchen table with someone else saying, hey, I really like this company, I really like the management, and why don't you invest in them? So it can help you all around in being a good company. And then lastly, the secondary markets certainly will allow liquidity down the road. Net capital, I think, is the front runner today, but you'll see liquidity down the road will help you invest and reinvest and hopefully make money along the way. Now, who are we? At Startup Portal, we help you from plan to profit, start to finish. We help you think about your business model. We help you set up the structure, help you prepare financials. And as you have questions, we try to be there for you in a day-to-day perspective using our cloud-based system. It's very important to us that we help you be the best you can from day one and focus on the business, not the financials. And I thank you for joining this series. Feel free to contact us, reach out social media, join our equity crowdfunding group. Please subscribe. We'll have additional content here in the near future. And if you have any questions, feel free to reach out. Startup Portal does not receive commission by any stakeholder or crowdfunding portals. This presentation is strictly for informational purposes only.